John Rubino is with us today. I am so fortunate to have a thoughtful leader in today's society. He talks about gold, he talks about real estate, he was an analyst on Wall Street, and we're fortunate enough to have him today. John, thank you so very, very much for joining us today. It's my honor. Always so much fun to talk with you.
Hey, Michael. Good to talk to you again.
Listen, a couple things have really been bothering me, and we've talked a little bit privately about this. But again, PPI came in pretty hot today. You and I have chatted about the fact that maybe we have another wave or two of inflation coming at us. In my business, I'm older than you are. And I remember the fact that the 70s, there were three waves of inflation during the 70s and into the 80s. And this reminds me a lot of what's going on right now. I think we're just finishing wave number one. PPI came in at like 2.6% this morning, and that's at the producer level. And then I wanted to ask you a couple things about currencies. I know this is a little bit outside of my wheelhouse, but I think it's right in your wheelhouse. We're talking, I've noticed in Japan that the Japanese yen is just collapsing. And I've had a couple of friends of mine have gone to Japan, and they've said how reasonable Japan is for them because they're spending in US dollars. But I'm thinking inflation is pretty high for the Japanese. And I think a lot has to do with their currency. First off, what do you think what's going on with inflation right now?
Well, you gave us two really good templates for understanding today's world. One is the 1970s, and the other is Japan. So, we can go into some depth on either one of those if you want to, but what's happening, what was your question? What's happening in currencies?
Well, you can see the Japanese currency is just falling like crazy. This happened to the Turkish lira too, not too long ago. It just literally collapsed. And Turkey was flooded with all kinds of foreigners coming in buying all their goods because the goods were, if you're paying in euros, you could buy Turkish goods for next to nothing. It was terribly expensive for the Turks, but others coming in, it was great. Inflation for the Turkish lira was off the charts. And I'm thinking that's what's happening in Japan. And where I want to go with this, John, is the fact that our debt is getting to the point where it is just exploding. And how are we going to sustain this?
Yeah, everything that I'm going to say about Japan can be applied to the U.S. with just a few years lag, okay? Because here's what happened with Japan. In the 1990s, they had an epic real estate bubble. It was, unlike anything the world had seen up to that point, and maybe still the biggest of all time. And then, of course, it burst. And that there was so much bad debt in the system that a lot of bankruptcies were looming. And the Japanese government could have just let the bad debt be gotten rid of via default, taken a really hard few years recession, and then come out of it in pretty good financial shape. But they chose the other path, which is to use government spending, massive deficits generated by the government with borrowed money, to prop up all the zombie companies that had been created by the real estate bust. And they really never stopped. The government has been running massive deficits ever since, to the point where they've accumulated debt that on a per capita basis is the highest of any government debt in the history of the human race. Now, that eventually comes back to bite you, and that's what's happening with Japan right now. They've got massive government debt, 260% of GDP, and they've been able to sustain that because they've kept their interest rates at incredibly low levels. Their 10-year treasury yield was negative for a long time in the previous decade and up until just late, which meant that they could carry their debt with no trouble. But now, because of the inflation that flowed from the world's response to the COVID pandemic, they created huge amounts of new currency, dumped it into the system to prevent a depression while they were shutting down all the small businesses. Well, that's pushed interest rates up around the world. And Japan's interest rates are now rising so that the 10-year treasury yield is up above 1%, which doesn't sound like much, but if you got 260% of GDP of debt that you've got to carry, even 1% is a problem. And so rates are going up at the same time the yen is starting to fall. So they are in that box that everybody's been predicting that the fiat currency countries would find themselves in eventually, where your interest rates are going up, your currency is falling. And if you try to address one, you make the other worse. In other words, if you look at the yen falling, you respond to that with higher interest rates. But if you raise interest rates, that causes the interest expense of the government to spike and bankrupt the government. But if you lower interest rates to protect the government from rising interest expense, then you risk the yen just falling apart. Because if it's already falling at today's interest rates, then it becomes even less attractive if yen-denominated bonds yield less and less because the government is cutting interest rates. So you could have the yen go into a death spiral and just collapse and bring down the Japanese financial system. Or you could have the government go bankrupt because of excessive interest costs, and that destroys the Japanese financial system. And those are their only two choices now. They have to pick one. Yeah.
Bad choices.
Yeah. I mean, they have to choose a major crisis. And they're dithering, they're right now they're kind of intervening in the market to protect the yen, but at a cost of interest rates staying too high for the government. And they'll have to switch and probably try to push interest rates down at some point. But whatever they do, they end up with a broken financial system because they borrowed way too much money. Now, the US is headed that way fast because if you look at our government debt, for instance, it's gone parabolic. It's going straight up right now.
Right.
And so are the interest costs associated with that government debt. So look at Japan, see what's happening there, and watch what happens to them in the next couple of years. And then look at the US and assume that that is going to be our situation going forward. So it's a brutal environment today and a very dark prospect for the next few years and maybe the whole decade.
Well, I saw a chart just last week talking about our debt, and we're expanding it at 6.9%, almost 7%. And it looks to me that if a 7% compound in 10 years, it almost doubles. I mean, that's just the magic of compounding, digits. And so we're talking about a debt that would be completely unsustainable. It would be completely unsustainable. And so you're right. I've been watching this Japanese, and it looks like the Japanese central bank has been monetizing the debt because they're the only ones that are buying the bonds for the government. So, and that's been going on for a while. They can do that for a while, but only for so long. So what can we as citizens do? Because the Japanese people is an older population, for one. A lot of them are taking out of the system where they used to be putting into the system. Very, very similar to what's going on here. What can we do? Now, we've talked about gold. We've talked about some real assets. What is it they can do to protect themselves from a falling currency, John?
Well, first of all, the thing to understand is we can't stop any of this stuff. There is just institutional financial momentum out there that is forcing all the major governments of the world, barring Russia, which doesn't have any government debt, it's forcing all the other governments to continue to borrow as baby boomers retire, for instance. We're taking our Social Security now and our Medicare. That's very expensive. So in the US and in Europe and in big parts of Asia, the retirement of the baby boomers guarantee the debt has to continue to rise dramatically. So there's nothing we can do to stop this. So as individuals, that's where the interesting intellectual challenge comes from. We're headed for this really chaotic, dark time. And how do we protect ourselves and our families?
Yeah.
And there are lots of things you can do. And, they kind of fall under the heading of prepping. Remember the old survivalists and the preppers that everybody used to kind of think were borderline nutcases? Well, they turned out to be the people who have the best lifestyles for what is coming. So you basically want to be as self-sufficient in as many different ways as possible. And that means have a garden, grow as much of your food as you can. When things are in season, can them, put them away. So that helps with broken supply chains in the agri industry, which is, potentially coming. And financially, you want to move as far out of financial assets, that is government bonds and bank stocks and financially oriented equities, because they're the things that will be hurt when governments finally choose to try to inflate their way out of all this debt and the currency plunges. You don't want to own something that pays you interest in dollars if it's going to be the government's policy to try to inflate the dollar away at 5 or 10 or 15% a year. So get out of those things and get into real assets. Real estate is normally something that you would try to own heading into something like this, but we've already had such an epic real estate bubble in the US.
Right. Yeah.
That you can't just go out and buy a random house thinking you're protecting yourself financially, because it's possible you buy something that's going to drop by 50% when the bubble finally bursts. But having said that, a really well-chosen piece of rental property, if you have the expertise in that business, to the extent that you can choose something like that. Well, that'll still work. But the thing that historically, when governments destroy their currencies, as they have dozens, if not hundreds of times in human history.
Historically.
Yeah. I mean, we do that all the time.
Yeah.
It just seems weird because we haven't done it in our adult lifetimes, but we're going to do it. And where people go when that happens is precious metals. Gold and silver are always the thing that people own when they're afraid of the currency that the government is running into the ground. And historically, again, for 3,000 years, those things have always held their value. Now, today you've got cryptocurrencies like Bitcoin that have a lot of fans who claim that Bitcoin, at least, has that same characteristic, that it's rare, it's fungible, it's safe. And because of that, it will hold its value along with gold and silver. And I'm agnostic on that right now because I'm just not technical enough to be able to make a determination about whether that's true or not. I think it might be, but I also understand that there's a lot of things I don't understand about this process, and maybe things will go wrong. I don't know. Gold and silver are fairly safe bets, though, because we got 3,000 years of history and we know how it's working. And a lot of countries are either instructing their central banks to buy a lot of gold right now. Central banks are net buyers of gold, and individuals in other countries are just buying gold like crazy. A couple of examples in South Korea, they sell gold in vending machines in like convenience stores. And those vending machines empty out within hours or just a couple of short days after they're filled up. So there's huge demand among individuals for small gold bars. And in Vietnam, the consumer demand for gold was so intense that the central bank had to step in and sell some of its gold in order to create enough of supply in the country to keep prices from spiking to unrealistic levels.
I heard that Costco is selling gold.
Costco is, and so are Walmart. So is Walmart.
Walmart too.
Yeah, but Costco is selling a couple $100 million worth of gold per month, which is over $1 billion a year.
Wow.
And so gold is, in that sense, it's becoming an impulse buy. You can just see I was in Costco a while ago, and they had a flyer pasted to the checkout stand. And it was a flyer reminding us that we could just have the cashier add a couple $1,000s to our bill for a gold bar and pick up that gold bar on the way out. Yeah.
So they sold it 1 ounce? Were they selling it in 1 ounce?
1 ounce gold bars. Yeah.
Really?
Yeah.
Wow.
And you can also buy silver coins on Walmart.com and Costco.com. And I tried the Walmart.com thing, and it's as easy as buying anything else on a high-end website. You just go in, you put it in your basket, you give it your credit card, and they send you some silver coins a couple of days later. Yeah. So individuals are taking advantage of these various opportunities to buy gold and silver, and they're doing that because that's a place that people hide out. It's a very normal impulse. And as more and more people figure out, they'll hear a show like the one we're doing right now, and they'll think, oh, sure. So that's something I can do easily. And it's a start in protecting myself. So when you get to the point where everybody has this idea and they're all starting to try to get through that little precious metals door, that's when things become kind of discontinuous, where not enough people can get through the door. And there's this huge rush to buy gold, buy silver, and people are willing to pay anything for it because they're panic buying. And you don't want to be one of the buyers when that happens. You want to be one of the people going, hey, I've got some extra silver coins here at $120 an ounce if you want some, and so it pays to be early before runs start in, assets of any kind. That was, it was good to be an owner of NVIDIA 5 years ago. And it was good to be an owner of Google stock 15 years ago. And gold and silver are kind of in that ballpark now, where they're becoming assets that are rare and highly desired, and because of that, people will pay panic prices for them. And when the rest of the world turns Japanese, that's when that will happen globally, and we're not that far from that.
Well, so maybe a program of just consistently buying one or two, kind of like dollar cost averaging, would be great. Because I think was you, or maybe it was Charles Hugh Smith, that mentioned the fact that when you're in a bubble, you don't know that you're in a bubble. You can only tell that you were in a bubble after the bubble's already burst. And like in the housing industry, my industry, I think 4 or 5 years ago was a great time to be buying properties. Right at the moment, I think that you and I have already chatted, probably not the best place to be have an entry point. So gold probably is getting to the point. Gold and silver, precious metals, people are, from my way of thinking, it's that gold and silver are international commodities that are expressed in international currencies. So it's not like you're buying only in yen or only in dollars. You can take your gold and silver and go anywhere and get whatever the local currency is. So to me, I think that's a really wonderful. They're fungible and they're portable. So I like that idea.
Yeah, okay, Michael. There's more to be said about the whole transferring wealth with gold and silver, because you're right. It's portable wealth. But with silver, silver's not portable wealth. It's really heavy. I bought a monster box, which is a box of 500 ounces of silver, a while ago from a friend who wanted to sell it. And I went to pick it up, and I was shocked by how heavy it was. So that's not the kind of thing you transfer from one place to another. Silver is what you use as cash when dollar cash becomes problematic for some reason. Like if the government dictates that the cash is illegal or something like that, then you use your silver coins to transact. Gold is relatively portable wealth. It's not very heavy for its value. And so you can take 20 or 30 Krugerrands from one place to another across a border, and they will suffice for paying all the bribes you have to pay, and then maybe buying a used car when you get wherever you're going. So they have different functions in our prepping. You want gold for bugging out, and you want silver for sticking around and going to the farmer's market when things really get crazy. So you want to own both, in other words, and you want to.
So do you suggest that they buy it in the old silver coins that was pre-1964, so 63 and before, gold and silver coins?
A lot of people like those, but to me, they add a layer of complexity because they're not 100% silver. So then you get into the calculation problem where, okay, the silver price is on Kitco today, it's $94 an ounce. So what is this 90% silver quarter worth? You have to do some calculating, and a pure ounce of silver saves you that calculation issue. You don't have to negotiate as much. Like if you've got a silver eagle and the spot price is this, then the silver eagle is worth at least that spot price. That you negotiate upward from the spot price instead of having to calculate downward. So I like just pure bullion rounds and coins and things like that because of their simplicity. But a lot of people do like they call it junk silver, what you were talking about, where you get a bag and it's measured by the weight of the bag. And that can be a thing too, but I tend to go for simplicity whenever there's a choice.
So John, do you do any timing? Now, you and I have talked about the fact that we have cycles, and all these cycles all have times that they run. They're not exact, but you can, there's signposts as you go along. Where do you think you are in the precious metal cycle right now?
Well, you mentioned dollar cost averaging a little while ago. So that fits into this discussion because it's tempting to try to call markets, to time them and buy more of something when you think it's cheaper and less when it's more expensive. But there are a handful of people in the world who can do that with some degree of certainty, and 99.999% of the population cannot time markets. And I put myself in that category. The mistakes I've made by trying to time markets would fill up the rest of this show. So dollar cost averaging is a way simpler, better way to do it. You say, okay, I'm going to put $200 a month into silver coins. Okay. And you just have like a standing order with a coin dealer or something like that, and your coins come. And that's it. And when the price is down, you get more coins because you're using the same number of dollars each month for buying. When the price of silver or gold are up, then you get less metal. And so your average price works out really well in the end. So that's the simplest way to do it, because you don't really have to think all that much once you set it up. And you definitely don't have to agonize over where you are in a cycle, which is virtually humanly impossible to call in any event. Now, just a couple of exceptions to that. If we have some kind of flash crash, where like in 2008 and 2020, where stocks just tanked and they pulled gold and silver down to ridiculously low prices. And then the Fed stepped in with easy money and gold and silver went right back up. If that happens again, which it could, we could have a stock market crash here because of any number of different things. And the Fed will almost certainly step in when that happens. If gold and silver are super cheap, relative to the last few years when that happens, then you have my permission to buy a ton at that point, because that's a cycle that's fairly easy to understand. Gold and silver tank because of some other concern, and the Fed panic buys precious metals by flooding the system with dollars that have to go somewhere, and some of them go into gold and silver, and the gold and silver go back up. That's a thing that could happen, but in normal fluctuating times, just dollar cost average.
Well, this would be a good time for them to maybe subscribe to your newsletter, because you send out an alert for something like that, don't you? That this looks like a terrific time.
Well, I don't give timing advice because it's really easy to be wrong, and then there's that paper trail out there of me saying now's the time to do it. That's not worth the angst for me as a newsletter writer either, as well as as an investor. So I just say, low ball offers, dollar cost averaging, do put writing, which is another way to buy things cheap sometimes in the equities market, and then just let it build up. So yeah. And, as for where we are in the cycle right now, there are two answers. One is that we're approaching a correction in equities because stocks are just ridiculously overvalued and the economy is starting to slow down. So usually that brings an equities bear market with it. And that makes gold and silver a little bit risky because they can be pulled down with everything else. That's the short-term story. You should be dollar cost averaging into this. The longer term story is that we have screwed up our financial system on such an epic scale that that the longer term story for the real assets that will protect us from what's coming, the longer term story is phenomenal. You could see gold go to $10,000 an ounce and silver go to $200 or $300 or $400 an ounce when the panic buying really gets going. And you could also apply the same logic to things like copper and uranium, because there's another part of this story which also involves silver, because silver is part of this new story that I'm going to tell you too. And that is, we're trying to electrify the world, and we're doing that partially with lithium ion batteries, but also with solar panels and power lines and nuclear power, and all of these things need lots of copper for the wiring, lots of silver for the microchips and for the other, energy transportation technologies that we have, and uranium for nuclear power. And there is nowhere near enough of any of those things in the world to allow us to reach the levels of electrification that we're aiming for. And the AI thing is just let's start with solar. First of all, solar panels are being slapped up everywhere in the world, and each solar panel includes a little bit of silver. And the newest generation of solar panels includes twice as much silver as the older generation. So the solar panel component of silver demand is spiking, and there's no extra silver to cover that. And on the artificial intelligence side of the story, AIs are being built by basically, it seems like, everybody in the world, and they need special chips for that. And those chips are energy hogs. And somebody did an analysis a while ago where they calculated how much energy would be needed for 1 year's chip production from NVIDIA if they were all plugged in and running. And that amount of electricity equals about what Ireland uses in a normal year. And that's
right?
That's one company producing chips, and in a world with multiple chip producers out there and multiple years for this build out to take place. So there's no way in the world that we have enough copper and silver to feed that dragon, and nuclear power, because all of these things need power that doesn't now exist. So we're going to have to put nuclear plants everywhere you look and slap solar panels on everything imaginable. And we're still going to come up way short. But along the way, the price of the metals that are needed to keep us moving along that growth curve are going to go up, because that's the only way you get new copper because we're already we're mining all the copper that can be mined at today's price. So the price of copper has to go up to 2, 3, 4 times today's price in order to bring currently uneconomic deposits online. And that's just all there is to it. So even if silver wasn't a monetary metal, it's because right now it trades along
Sure.
with gold in a lot of ways. People use it as money, but as an industrial metal, if that was its only story, it would still be a spectacular story because it's incredibly cheap compared to what it has to be for us to get that silver from somewhere, and it's not even clear we can do it at all. But for us to even take steps in that direction, the price has to go up. So that's why, all this gloom and doom stuff can be scary, but it's also a really exciting investment thesis.